This is not a video that will tell you how to make 100x profits tomorrow. This is not a video that will give you the next 100x altcoin. But if you don't know these things, this is probably the reason why you're failing as a trader, why you're failing as an investor, and why you're failing financially in general. These are the things that you need to learn and apply in your financial journey, and this is something that will lead to success in the longer run. So stay tuned. Hello everyone, I'm Željko and welcome to CryptoGrid. So the last few videos really took off and thank you for watching them. If you're not subscribed, please consider subscribing since a lot of you are still not subscribed, around 80%. So thank you in advance. I realized as we are deeper and deeper in the bull market, people are looking even more for the next 100x altcoin and for the things that it's not that it doesn't matter, but it's way less important. And they're focusing less on the things that matters. And this is why I decided to create this video, and this is probably the thing that will either make you successful, or if you are not applying this will wreck your portfolio at one moment in your investing journey. And that's pretty much your investment strategy. When we talk about the investment strategy, everyone thinks how you distribute your money across various assets, and usually it looks like that. You have some kind of portfolio and you distribute between Bitcoin, Ethereum, layer 1s, AI sector, gaming, memes. You can add more sectors or less. It doesn't matter, but this is how people imagine their investment strategy. And one of the things they don't think of is how they distribute the money afterwards, when they're taking profits and things like that. And the topic of today is also why FTX failed. They failed because they were transferring their money to the Alameda research, and they were driving more money, and at one moment they were also over leveraged, of course, but when the BTC price and other asset prices failed, it led them to the situation that they cannot pay back their customers if they would ask for their money. So today I wanted to show you this. At first it might look complicated, but it's pretty simple. I go through it step by step. Stay calm. It's really easy to understand as you're watching it. Usually you have some kind of initial investment or account. Let's say if it's $10,000. Firstly, you want to distribute that between various things that you're doing, and you want to think strategically in terms of what are the things that won't lose you money and what are the things that might lose you money, and usually you want to have like smaller percentages of that initial investments into the things that are like more risky. So the first things and what you should always have is some type of the savings account where you're just depositing your money or assets and where you're not taking from pretty much at any moment. I'm not sure how is it your country, but in Serbia, where I'm from, if you wait to leave from the pension fund, you won't end up well, and usually like people of my age always needs to help their parents to sustain themselves because it's just not great. So my suggestion is like to deposit 20% into it, and pretty much from all the other sources you will be depositing into your savings account, and you want to accumulate it more and more over time. The second thing is some type of a long-term portfolio. This is something where you're gonna deposit majority of your funds, and this is something what you see as a high potential. This just doesn't apply just for crypto markets. You can look at it in a stock market as well, or anything that you see a huge potential in the longer run. You might do some trades here and there. If you see that you're approaching to the top of bull market, you might cash out majority of your investment here, or you might buy more into it if you are at the bear market and you see that the market structure is about to reverse, or if you see that we already fall about 80% or something like that. Other things that you want to have is like maybe you want to buy a house, so you start depositing some money here. Maybe you want to start some local business, so you start depositing some money here. Maybe you have some futures trading account and you want to do that. Maybe you want to create something for buying small cap coins. The most important thing here is that you never take the money from these things to invest into these. This is something that, like, let's say if you're good at futures trading, it should sustain itself. Otherwise, if you see that your futures account is decreasing, obviously you're not good at it, and you shouldn't be adding more money from the profits that you're making elsewhere. Same applies for the other things. Maybe you want to create some structure where you're gonna have similar approach to this. Maybe you want to do something riskier, but you want to have some kind of approach where this amount of money is gonna increase over time and you wanna keep that money there as you're accumulating more and more. So the second thing that I wanted to say is maybe you're depositing, let's say, some amount of money each month. Some of that money, let's say 20%, should go into the savings, 50% should go into long-term portfolio, and the rest 30%, maybe you want to start new business, maybe you want house. So you can either distribute this money or you can just invest into one thing. As I said, if you're doing something risky, maybe you're trading with 20x leverage or something like that, you don't want to put more money into that account because if you're good, it will already grow pretty fast. So what are you doing if you blow off this account? So pretty much you're waiting to make profits into usually long-term portfolio and you're only investing the profits that you made. You never want, let's say if you have $10,000 in your long-term portfolio and you take $5,000, that's really bad approach. You want to make, let's say, 10% on these $10,000 and you want to invest 10% into your new futures trading account or some kind of new business or anything like that. If you look into the savings account, you never want to move your money from there. You just want to add up more. You want to add from the long-term portfolio. You want to add like from the successes in your futures trading, and all the other things are going into the savings account. From your long-term portfolio, you want to keep majority of the money there because it's probably something that might not grow that fast as some other areas, but if you're looking in the longer run, it should have upwards trajectory, so it should usually grow. This arrow that is going to new business, as I said, it can be new futures account, it can be money that is helping you to buy a house, to buy a car, to start something locally or whatever you prefer. The only way when it's okay to invest like more money into the new business if it's something that is capital intensive and if it's something that you already have sales ordered, you just don't have enough money to produce enough inventory, so you drop the money to produce more inventory that you're gonna sell immediately. But if it's not something like that, honestly, I would keep all of them pretty much separate. The reason why, for example, if you look at futures trading, it's probably like the riskiest thing of them all, and this is why you keep like 50% of your profits in your trading account, you move like 20% to your savings, and you move 30% to your long-term portfolio. This is some basic template how you can do this. You can pretty much take the screenshot of this and adjust it for your own purposes, obviously. Also, majority of your funds should be kept on hardware wallets or something safe. Some of this money, let's say if you're doing futures trading, you can keep even multiple accounts. Let's say you keep one account on one exchange, second account on second exchange. And even if you are super successful and you manage to accumulate even more money there, at some point you want to move it somewhere else just so you don't keep so much money in centralized exchanges. The main purpose of this system is if one of your accounts blows up, you pretty much have your long-term portfolio, you have your savings, and this is the two things that will grow further and further over time. And if you are performing well at the smaller businesses and smaller things that you're launching, you will grow these things much faster. This will super grow your long-term portfolio, and even afterwards, if something of them blow up, you will have like bigger percentage of money to invest into this, because on a larger portfolio it is easier to make like larger returns, because profit come from risk, and like if you're taking the same amount of profit, you're usually decreasing risk if your portfolio grows, and if you're taking like larger amount of profits proportional to the increase of your portfolio, you're keeping the same amount of risk. Another thing that is important to have in mind is that usually you also want to have some cash. You can keep your cash separate from this, or you can add them to all of these accounts. And just by keeping even like 10% in your cash will help you a lot in a longer run, because when some great opportunities come, you will have that cash ready to go in. And this is something that people often forget. They either go all in into the crypto or they fully exit, keeping all the money in the cash. And you should never be completely one-sided. You should always be in a position to accumulate more assets if it's a great moment for that. If you're watching my videos, you know that I held majority of my money on Binance at one moment and I lost 40k. And if I was applying this at that moment, that would be much smaller amount of money from me that I lost, and I would be able to move on much faster and much easier. If you apply this, you will never stay out of money and you will never blow up your main accounts, because you will always have this part and this part of your portfolio on your harder wallets and you will always keep them safe. So I hope that you like the video. If you do, please consider subscribing. Again, thank you for watching. If you have any questions, feel free to comment below. You can also take the print screen of this and adjust it for your purposes. Thank you for watching. Stay strong and healthy. Bye.